Alright, welcome to our weekly update on the Australian property market, where we discuss waves, impulsive waves and corrective waves around Australia. After 10 months of running my analysis of the Australian housing market, it's time to check how accurate my projections are. Just as a reminder, I started the channel in June 2023 when we came off the COVID-created impulse that injected into the housing market billions of funny money. The question was, are the prices going to keep falling? A lot of commentators who follow the fundamental analysis insisted that this is the end of the cycle, that the prices are only going to go down. I claimed we have to go through the final huge wave up, provided by the generosity of the RBA, whose job is to maintain low inflation and low unemployment. Now we know how is that all going, but enough about failures. Let's talk about some successful predictions. My first video was about the Victorian suburb of Burwood, 3124. I initially thought the correction is going to be a little deeper, but then I expected a rebound that will eventually hit record highs. While there was no further drops, the market started a new wave up, as expected. And while most pundits claim there will be no high highs, I'm predicting record highs this year, as we are about to witness the unleashing of liquidity. Burwood is about to explode higher within weeks, perhaps not next week, but 3-4 weeks later. Overall, I'd say I was correct about the reversal of the trend. We're going up from here. Next, it was Bankstown 2200. In June 2023, I already knew we have started a new wave that was undergoing a correction before the fireworks begin. And guess where we are at the moment? Just as the correction seems to be over, we are slowly grinding higher. Give it another few weeks to correct this initial tiny wave for the fireworks to begin. Expect some spectacular gains as more people will be encouraged to enter the market with new government schemes and securities for the first home buyers. It's the third wave and the final wave up, which usually brings the highest gains. After that, we should have a huge correction in the stock market and a minor correction in the real estate market, which will be followed by the final wave up in the very last broader wave. This postcode was a resounding success. I accurately picked the bottom of wave 4 and predicted growth past that point, despite all the negative news about the cost of living crisis. The third postcode I went to was a Queensland middle-class suburb of Ashgrove. I must admit it was my biggest disappointment, as at the time I believe Queensland real estate market was behind the price curve comparing to New South Wales and Victoria. It turns out I was wrong. Ashgrove not only didn't go into a double dip correction as expected, but it has started a new final wave 5 and already smashed through the last high from July 2022. It's going up on steroids, which probably is related to the population growth, both interstate and overseas. Nevertheless, despite missing the turning point in the trend shift, I predicted that we're going up and we should expect some huge gains. We just started a third wave within the final fifth wave. There might be another 2 weeks of declines, but what you're going to witness after that is going to be mind-blowing, especially for Queenslanders who have never experienced such gains. This initial spike of the third wave was truly astounding, indicating there is a lot of fuel for this suburb to explode higher. We are right on the money. Next, we covered Bondi 2026. It took me by surprise. While I expected Sydney's ritzy suburbs to break the trend first and start the fifth wave, the opposite happened. It took Bondi houses another 6 months to finally reverse the trend. So it actually achieved what Ashgrove's supposed to do and hit a prolonged double dip correction. It might be related to locations with higher price tags and sales volumes, but I don't want to speculate about the fundamentals here. Still, as predicted, it's going higher, and given the size of its first wave within the last fifth wave, the upcoming gains are going to be absolutely ridiculous. It's hard to imagine it given the current consumer sentiment and market expectations. As predicted, the Bondi units market performed spectacularly. The initial dip was followed by the huge third wave that we are in the middle of. You can expect another huge spike over the next few weeks that will reach an all-time highs. It's a bizarre world that we live in. Units, right on the money. After that, we moved to the other side of the country to see whether there is any lag between the east and the west coast. I dare say the correlation or the target hit is near 100% despite the huge volatility. The video was published in early August 2023 when we came off the third wave of the broader third wave. At that time, I knew that the market was asking for another spike. I didn't expect it was going to be so rapid though. It lasted only 2 months. That's how volatile Fremantle can be. By October 2023, it has lost about 40%, only to start grinding higher. The record hype in prices over the next few months is a must. It may even touch on 1.5 million mark or get very close to it. Albert Park houses. I managed to pick the bottom of the fourth wave. What took me by surprise was the height of the first wave within the final fifth wave. It was fundamentally a well-structured wave with an enormous potential. It indicates the upcoming wave 3 is going to surprise many mainstream pundits whose sentiment is negative at the moment. As usual, expensive suburbs are more volatile and have better potential for gains. The incoming wave 3 should easily smash the last record of 3,111,000 and reach 3.5 million, or even pierce through that value. Units performed as predicted. It seems I was a little too confident that they are going to outperform to the upside with higher highs and higher lows. Nevertheless, the wave order was perfectly matched, meaning that I accurately established our position in a cycle. After that suburb, I produced a number of videos covering overseas markets, out of which I'm already seeing a humble trend reversal in Berlin that is to be confirmed as more data emerges. But let's get back to Australia. One of the most prominent and volatile towns in Australia is Byron Bay. The video was recorded as a response to an article that lamented massive losses in the local real estate market. My conclusion was, we are just undergoing a small correction. Expect a trend reversal and some huge gains ahead. Boom! Still in September, we had a trend reversal with higher highs and higher lows. It wasn't as spectacular as the theory suggests, but we have only started this wave. Expect some fireworks later this year, I'd say sooner than later. Then a spike or two, followed by a deep correction later in the year, perhaps expanding to the next year, and then the final showdown. Then we ran the analysis of Hobart 7000. The expectation was for another smaller spike. Hobart delivered 2 spikes of the same strength. Then we started a shallow correction, which I believe is about to end. We might get another 2 or 3 weeks of drops, that's all. Then we should see more growth that is going to challenge the previous record highs. After which we are going to have a deeper correction, probably associated with a major slump in the stock market, followed by the final wave up that will conclude the big cycle. Again, the Hobart analysis was a perfect match. Then I ran a video on interest rates, whether we should expect interest rate hikes in the near future. I was only partially right. The RBA delivered only 1 out of 3 expected hikes, and it looks we are going to see maybe 1 more hike, but probably no more in the near future, as US 10-year bonds are in a correction now. That is going to deliver a freeze in the interest rate hikes. But I'm going to run a dedicated video with an update on this very subject. Next, we covered the most mortgage-stressed suburbs of Melbourne, which CoreLogic was lamenting about, worried about the potential drops in valuations. After running an analysis on 4 suburbs, I concluded there should be no collapse in prices, despite higher risk of defaults. The price action in those suburbs is rather muted, due to lower prices and less speculative capital entering those suburbs. It's worth noting they all performed as planned. One of them, however, deserves some extra attention, as it performed better than others, which was pointed out in a video produced in November 2023. The suburb that brought my attention was Westburn. The initial price action suggested it was going to perform better than others, and voila, it has perfectly closed off wave 1, run through a shallow correction, and move to the third wave, which is already showing some potential, much better than surrounding suburbs. You should expect some unusual gains for this part of the world over the next months, followed by a correction and a final spike up. Another perfect match. And last but not least, the Airbnb hubs of coastal Victoria, which have been marked by the media as potential money loser. The video starts with Geelong, the coastal town with the most diverse real estate market in the area. It's another perfect match. After a humble start of the fifth wave, they have stepped on the gas pedal, and we are awaiting another huge spike up that will smash the last price record from the September 2021. Surprisingly, it may get a shallow correction after that. That is not as deep as the rest of the country. Then we should expect the final spike up and the more record-breaking prices. Sad but true. The same applies to Torquay, which has concluded Wave 1 and suffered from a shallow correction. What's coming next is going to shock a lot of Victorians. Hold on to your hats, as the injection of currency into the system is going to affect even small towns like Torquay. The scenario will repeat itself. So to summarize, as pointed out 10 months ago, we are undergoing a shallow correction comparing to the other countries like Canada, USA or Germany. It's definitely not the end of the cycle, as there is more printing expected that will blow hot air into the artificially created bubble. The fundamentals might be deteriorating. People are going to lose full-time jobs. The cost of living is going to bite due to inflation. And yet the RBA solution is going to be more printing, adding more inflation. That inevitably is going to pump house prices via mortgages. Therefore, I would be very careful before making any financial decision based on the fundamental analysis provided by the media, government, or financial experts. Fundamentals are detached from reality. Now it's all a function of injection of liquidity via credit and the manipulation of the consumer sentiment. It's the play card that has been successfully used over the past 3 decades, which can be proven by the unusually shallow corrections in the house prices over the span of this cycle. Hopefully, we are going to collectively engage in critical thinking, drop the FOMO, and truly reflect on the mechanisms used to run these markets. Interest rate hikes might stop for the next 6 to 18 months, but what happens after is going to be dreadful. We are going to dry the credit up with double-digit interest rates, as the US 10-year bond yields suggest. A lot of mortgages are going to get underwater as a result, as there will be no buyers left to wipe the flood of housing stock forced to sell as a result of mortgage stress and defaults. It's going to be truly epic, but that's a subject for another housing market update. Meanwhile, stay calm, stay rational, and count waves.